Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. Amidst the increase in volatility on account of uncertainty pertaining to election result margins, Nifty has corrected by 1.8%, with underperformance clearly visible in Bank Nifty, mid cap and small cap indices, which have corrected anywhere between 3 to 5% in the week gone by. This is despite a stable rebound in global equity markets, with S&P 500 closing above 5,200 levels and dollar index as well as Brent crude oil prices stabilizing around $105 and $83 a barrel respectively. Tracking the fund flow and derivative positioning, FIs have been sellers in the cash segment to the tune of 21,619 crores, while DIs have bought equities worth 17,367 crores in the week gone by. There has been a significant deterioration in the FI index futures long short position. If we see, the ratio has dipped from 43% a week ago to around 34% currently. Also, a staggering 88% rise in India VIX has been seen from the swing lows of the previous month and has definitely led to some incremental weakness in the market during the past 7 to 8 trading sessions. A general question that could arise in our mind is what should be our approach in the coming few weeks. While the traders need to be a bit mindful of the possibility of a further increase in volatility as the election further progresses, thereby the traders should follow a prudent risk management policies, following stop losses as well as appropriate position sizing, and try to control leverage. Such situations often act as an opportunity for investors to cherry pick their favorite stocks on dips at lower levels. Focusing on quality is the key over here. Booking regular profits and having a correct mix of large cap and mid cap in your trading portfolio is also very essential. Coming to the Nifty levels at the current juncture, so the zone of 21,750, 21,700, which are the prior swing lows which were seen in March and April 2024, will act as a crucial support for Nifty. Any sustainable move below the levels of 21,700 will lead to further selling pressure in the index. In that case, it is likely to test the levels of 21,500 followed by 21,350 in the short term. While on the upside, the 50-day EMA, that is the zone of 22,200, 22,250, is likely to act as the immediate hurdle for the index. Any sustainable move above the levels of 22,250 will lead to short covering up to 22,480, 22,530 levels. Significant open interest build-up is witnessed in 22,000 and 22,100 calls, whereas on the put side it is seen in 22,000 strike. Implies that the probable trading range for the next few sessions could be 21,850 on the downside and 22,150 on the upside. If we analyze the ratio charts, sectors such as capital goods and auto, these are the sectors which are looking relatively strong, while PSU banks and IT sector have demonstrated weakness in the week gone by. Coming to Bank Nifty, so Bank Nifty witnessed resistance near the upper trend line of the rising channel in the last week of April, and thereafter it witnessed a sharp sell-off of over 5%. Currently, the index is trading below its 20 and 50 EMA levels. Most noteworthy, the daily RSI has given upward sloping trendline breakdown on the daily scale. This indicates bearish momentum in the index. However, we believe the zone of 46,950, 47,100 will act as a crucial support for the index, as it is the confluence of the 100-day EMA level and the lower trend line, that is the demand line of the rising channel. Any sustainable move below the levels of 46,950 will lead to an extension of the correction up to the levels of 46,500, 46,300 in the short term. While on the upside, resistance has shifted lower in the zone of 47,900, 47,950 levels. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.